Buckle up, folks, because we're headed into some big economic turmoil. I don't normally like to put timelines on things, but within a year, and I think starting here in the fourth quarter, which is coming up here in about a week or so, starting in the fourth quarter, we're going to start to see some major things unravel. First of all, hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ. Back today with my headset. I do have a fan running in the background, so I wanted to give you the best audio possible. So this seems to cut out most of the background noise. But as a backup, I've also got this here. So I'll probably run a right and left signal and pick the best one and put it back into stereo. Anyway, it doesn't matter. Also, the sunglasses, I've got some issues with my eyes. For those of you wondering, and every time I wear these, people always make comments. So I'll explain that later in the video. Let's get right in here to the news here. First of all, inflationary forces are currently hitting the U.S. economy and U.S. consumers. U.S. consumers being the U.S. economy, with most of GDP coming from consumer spending, and most of that spending is people borrowing money. So it's no coincidence that every time you see debt increase, and in this case it's been increasing for the last 12 years, it's no coincidence that every time we see that happen, we see what looks like a good economy, right? But it's mostly driven based on borrowing and basically pretending that everything's okay. Well, the piper is waiting for his money, and he's about ready to get paid because it's time to pay the piper, right? We've got the student loans resuming next month. Take a listen to this, though. We've got JP Morgan out there predicting the super cycle in oil possibly reaching as high as $150 per barrel. Folks, everything coming together all at the same time here. Households loaded up on debt like we've never seen before. Oil starting to go up again. Rates going up. We've got the treasury yield just under 4.5%. That actually dropped a bit today. This is going to push mortgage rates, though, to 7.5%, likely 8% here, I think, in the next few months. We are about ready to see some fireworks coming up here very, very soon. Now, the last time I felt like this was prior to 2020. And for those of you that have been on this channel, you know that we called it. We said 2020, some bad things were going to go down. I didn't know it was going to be a global health crisis, but that did bring the markets down temporarily, and it did cause a lot of financial hardship. But what happened was helicopter money to the max, to the moon, and we all know what happened after that. Inflation started taking off and never came back down. Well, if they try the same thing again, if they try to flood the economy with money like they did in 2020, you're going to see inflation go the next leg up. And guess what? People can't stand the next leg up, because normally when you see asset prices too high or bubbles in assets, you see some sort of correction, prices come down, pick up the pieces, start again, QE, lower interest rates, and then the cycle starts all over again. This time, we don't have bubbles bursting. We have bubbles that are still blown up to the max, but now threats of making them go larger, right? Inflationary threats, not deflationary, more inflationary than deflationary. So JP Morgan sees the writing on the wall. We've got the OPEC nations out there cutting production. The reason why oil prices haven't skyrocketed more than what they have already over the past year is because the strategic reserves were drained to 40-year lows. And I'll just give you a quote here from an article here. Markets Insider, I think they're the same company. Quote, U.S. playing with fire as oil reserves plunge to 40-year low. Now, we've talked about this before, and I want to clear up something on this here. And in previous videos, when we talked about how low the reserves were getting, we talked about how many months of supply were remaining. Now, that number is based on if we didn't fill up any more oil, or if we didn't buy any more oil or refill the reserves. They're still putting some oil in the reserves, so it's not like it's going to run out. But when you talk about the supply and how many months until it runs out, that would be if no new oil were to be added, right? So hopefully that'll never happen. But the point is that we're at 40-year lows for this oil. That's going to be another inflationary force. We've got the countries that are turning back on the U.S. dollar, or turning their back against the U.S. dollar, or turning their back to the U.S. dollar. We've got these countries out there also really dropping off on the amount of U.S. debt that they're purchasing. That's why we see yields skyrocketing, because in order to attract investors to debt and this debt that we're carrying or trying to unload or offload, we need to have higher yields. That's why yields are spiking. And with the 10-year yield, you see mortgage rates spiking as well, right? So all of this de-dollarization, it's multifaceted, right? It's multi-pronged. And we have to look at the countries that are sick of the U.S. printing endless amounts of money, putting sanctions on other countries, and lots of other things we've done over many decades, right? So that's another inflationary force. But let's get into some other news here today and get into the stock market, right? All of the indices today, every index was in the red, and we're down for the week on most of these indexes as well. Indices, every index. And I think the markets are finally starting to see what we've been talking about here, what we've been warning about, that this economy is in big, big trouble, starting with the U.S. consumer in this cost of living crisis. Now, let's talk about the housing market and tie it in with the broader economy here. The housing market is frozen right now. Sales have plunged. Prices have not plunged. In fact, prices went up over the past few months. Depending on your location, there are some locations where they continue to drop month over month. Sales dropped, though, to very, very low numbers here. Let's talk about these numbers here. And first of all, the median home price, before we get to that. The median home price for single-family homes was $407,100 last month. That was up 3.9% from a year prior, when the median home price was just under $392,000. So we're still up year over year on this median home price. How crazy is that? Well, here's the thing. In the next year, I think we're going to start seeing the housing market turn over. And I believe it's going to start with people that bought their home in the past year. Now, why do I say that? Because they bought at rates between 6 and 7% for the most part. And they also bought with very low down payments. We've talked here multiple times and spoken about the very low down payment programs that are out there. And so I think the people that bought in the last year are going to be the first ones to put their home on the market. You're going to start seeing late payments, and then people will be forced to sell, forced to put their home on the market. Now, could they come out with a new program because of some global crisis that says that nobody can get foreclosed? Absolutely. And I'm also putting the warning out here for that. Look out for something big to drop down and really throw things into turmoil. And I think a lot of it could be news that's going to come out of the political world. We see a lot of things happening right now politically. I can't really get into it here on this channel, but the bottom line is it's going to cause some big scares when certain information starts coming out. Again, I wish I could go more into it here, but I just can't do that. Let's talk about this, though. There's a prediction out there that the Brics currency will be linked to gold at some point. And we have a few different economists out there saying that. And we try to back it up here with the fact that the central banks, especially the central banks of these Brics countries, have been buying gold at record levels over the past few years. And according to the World Gold Council, the top buyers in gold of gold in 2023 were the central banks of the Brics countries. And it was Jim Rickards that came out recently and said he thinks it's very likely that the Brics currency in the very near future is going to be linked to gold. He didn't go into much detail if it's going to be 1-to-1 or 100% backed or redeemable, but he did say it's going to be linked to gold. So could it be partially backing the currency that we're going to see? We'll have to see. Other people say it's still just going to be these countries trading with each other in their own currencies, but also including gold, right? So it could be a lot of different things. It could be a combination of both. The bottom line is we're going back to hard assets ultimately for the monetary system. Now, before that, though, there's going to be this push for a completely digital dollar, CBDCs, standing for central bank digital currency. What that's going to be a nightmare of monitoring and control. And we're talking about the surveillance state times 1,000, right? With that type of currency, it's basically programmable money is what they want. And that's bad because if you do something they don't like, they can shut it off just like that at the click of a button. Right now, they have to go through a bank and have the bank shut your account down. You could have multiple accounts. But in this case, they'll have complete control to shut down your purchasing power or your ability to buy anything if they don't like what you say, if they don't like your views. Look what happened up in Canada with the truckers, right? A lot of the truckers They came in and tried to freeze their bank accounts because they called them protests. So, things could unfold here in the United States where people are going to be hitting the streets to protest a lot of what we're going to see. And a lot of it's going to be the financial and economic turmoil that's going to unfold because people are going to see themselves losing their homes, getting kicked out of their apartments or their rentals, and they're going to see all this money we've been throwing everywhere except for the people that really need it for United States citizens. And I think we're going to see major upheaval in the U.S. population. And that's what I was trying to talk about earlier. Politically, we're going to see a lot of things come out and a lot of things happening here in the next year. Combine that with the financial stresses of all the households going into the fourth quarter here this year, and fireworks are going to really be bright and loud. Also, back to oil. I wanted to mention this earlier when I was talking about oil. We've got Russia out there restricting oil exports, including diesel. So banning exports of gasoline and diesel both. What's this going to do for prices, right? So countries that we may be buying it from. See, what we've done here for a while is we've bought from countries that ended up getting oil from Russia. So really that was a way to get around the sanctions, right? Russia just increased their exports to certain countries, and a lot of those countries we bought oil from, but we were trying to punish Russia by not buying oil directly from them. Basically, they just found a way to get around it, so it really didn't hurt Russia. But what's going to happen now, they're banning exports of gasoline and diesel. That's going to be another upward force, upward pressure or inflationary pressure in oil and gas, right? So another thing to look out for when you're looking at the price at the pump. Also, we've got another risk out there. And here we go again. I know a lot of you are going to say, here we go again. It'll never happen, but here we go. We got to talk about it. Out of the Post here, U.S. braces for costly government shutdown starting in October. Millions of federal employees and active military members will stop receiving paychecks, but many will be forced to report to work anyway. Right? So they're not going to necessarily lose their job, but they may be working without pay if the shutdown happens, and that's going to be less money in the economy. So another thing to look out for. Last time the government shut down, we saw some things happen, like some parks closed, things like that. They tried to punish things or punish people by taking away things that people like to do, like go to parks and things like that, national parks. In 8 days, the U.S. government is set to shut down, unleashing real and wide-ranging financial hardship on American families, workers, and businesses. The lapse in funding would mark a fundamental breakdown in an ever-divided Washington, where politicians demand spending cuts and more fiscal responsibility, yada, yada, yada. We have the politicians out there doing what they always do, create drama. At the bottom line, though, I don't think they're going to shut down. But again, that could be the event that pops up that nobody expected, because everybody expects it to happen. Everybody expects it to just get passed and the government resumes being funded. But will that be one of the shocks that we're going to see here coming up here in the next week or so? We'll have to find out, but we got to be prepared for it nonetheless. Let's talk about the housing market again here. We have some data out of Redfin. Home sales dropped 13% year over year as mortgage rates stay stubbornly high. Not just that, they're going even higher when you look at the yields, what's happening in the bond market right now. Here's a survey. Most people support more homes being built because I think people know that we need more homes to balance out the supply versus the demand. But most people don't want apartment buildings constructed in their neighborhood, right? So do you want maybe a big apartment moving in next door to you, or being built and a bunch of people moving in next door to you, and you know it's going to really cause congestion, a lot of traffic, and lots of other things? Also on housing, demand for vacation homes is now at a 7-year low due to high housing costs and rebuilding costs, home building material costs, and also the return to office. A lot of companies, even recently, have announced return to office protocols. And we saw a lot of people go work at home starting in 2020. Some companies kept that going, but several companies, including big companies, are calling workers back into the office. So a lot of people went out and bought houses when they found out they're going to be working from home. To me, that seems pretty irresponsible, but it was kind of a knee-jerk reaction to everything that was happening in 2020 that really, made a lot of people go cuckoo, crazy, right? Housing market update: monthly housing costs hit an all-time high, deterring would-be buyers. So unaffordability got worse again last month. Also, a lot of people are getting cold feet now because they see what their mortgage payment would be here. We have a combination of people getting FOMO, fear of missing out, and just buying a home because they think prices are not going to come down and rates are going to go higher. So they think unaffordability is going to continue to get worse to infinity. I think that's a mistake. I think there is a breaking point with the economy and in the housing market. But 1 in 10 home sellers are moving because they're being called back to the office. So that's something else that could add a little bit of inventory to this. And we're also seeing more home purchases, home contracts getting canceled. Again, people getting cold feet when they see that monthly payment, and they know that they just can't afford it. So we'll have to see how it plays out here. I still think we're going to see the housing market correct big at some point when the rubber really hits the road with the U.S. consumer. So the bottom line, folks, the Ponzi scheme economy that has the mega rich at the top of the pyramid there is beginning to unravel. And there's going to be a lot of different fingers pointing a lot of different directions on what caused it. But we all knew that this was inevitable. When you have any sort of system that relies on constant accumulation of debt in order just to function, then you know there's going to be an end game at some point, at the end of the road, right? It's just that it's been delayed, it's been manipulated, helicopter money. But then again, we have inflation out there. They can't do helicopter money like they did in 2020. Otherwise, it's game over for most U.S. consumers. I think 80% plus of the U.S. consumers will be financially wiped out if inflation goes up any higher than what it is now. So it's not going to be long now, folks, right? So we've got to keep an eye on all these different things. I hope you're well. Hope you're stacking, staying prepared. Emergency expense, cash, and essentials, food and water out of the system at home, at least 30 days, hopefully more, because this thing could break any point, right? We've seen historically the Fed raises rates until something breaks. How big is that break going to be, and how long will it last, right? So that's the thing we've got to worry about here. Yes, we want to invest, but we also want to be prepared for some real bad stuff to go down. Somebody pretty well known, we've got Kevin O'Leary out there from Shark Tank. Banks are going to fail. It didn't say how many, didn't say specifically what banks. Warns the commercial real estate collapse will have dire consequences, right? So I think they're covering that up. Have you ever noticed in the past, for those of you old enough to have lived through a couple bust cycles or bust periods in the economy, everything looks good up until one day you wake up and they say, oh, by the way, look at all these banks that failed. I remember Jim Cramer out there saying the banks are strong and nothing to worry about. He even said do not sell certain bank stocks of banks that ended up failing, right? So what the news and pundits and the business news broadcasters like to do, I think, is they like to keep things under wraps or hidden until it becomes painfully obvious to everybody. Now, everybody should be waking up now because they see their own budgets and they see the cost of living. But until something really breaks or start to collapse, people won't put one and one together, is what I'm afraid of. But there will be a day where we wake up and the news will be talking about some big collapse, some huge bank failure, crisis, and the rescue is going to be the nail in the coffin for the U.S. consumer, because inflation going up higher with more of this QE or helicopter money or rescue programs, bailouts, whatever it's going to be, a combination of all those things, it's going to be highly inflationary and highly destructive to a lot of people, right? So everybody be careful, be cautious. Hope you're well. Hope you like this report. Now let's get into what some of you are asking about. I don't think I really should be talking about this, but somebody makes a comment every video. What's with the sunglasses, man? These are blue blockers. Yes, they're slightly tinted, and I'm indoors right now, so they look darker than they really are. And I'm having some issues with my eyes, and it's because I look at screens too much. Basically, my regular job is in finance, and basically I'm looking at a computer screen all day. I work at home. Then I do these videos, do research for these videos, then whatever else I do later, helping somebody with homework or something, looking at screens, big portion of the day. Ended up starting getting blurry vision. But instead of just getting prescription glasses, what I did was I got these blockers here. They're supposed to block the harmful rays. And actually, after only a few days of wearing these while I'm in front of the screen, some of the blurriness has faded and my vision's actually gotten better, right? So I think they're working. For those of you that this, bothers you, because I've seen some of you make comments on this. I apologize, but I've got to do what's best for my health. And, if people don't want to watch the channel because of glasses, I mean, that's kind of silly, but I guess it is what it is. Anyways, hope you guys are good. As always, big love. Keep stacking. Bye for now. Peace.